In the first 9 months of 2020, Nigeria recorded a total of $5.1 billion portfolio investments in a period when the coronavirus pandemic was still hitting a heavy blow on the country's economy. But there was a significant investment in $4.3 billion in the first quarter, but the investment experienced a decline in the second and third quarters. This was attributed to the fear of second wave of COVID-19 virus by investors, particularly in developed economies. Although the country is still recording the losses accrued during the total lockdown imposed by the federal government to address this ugly scourge. Now, business activities have also been brought to a halt. Now, one of the impacts is the growth contraction in the second quarter of the year to about 6%, bringing the economy to its worst recession in more than 4 decades and second in 2 years. However, stimulus packages and the interventions by relevant government agencies like the Central Bank of Nigeria have continued to suppress the pressure of the economic stagnation in the country. Now that the country is now dealing with the second wave of the coronavirus, let us discuss processes in place for quick economic recovery amid global shocks, as well as investment climate going forward. Joining me now, live from the United States of America via Skype, is a professor of international business and public policy, Professor Kingsley Moghalu. Professor Moghalu is a former deputy governor of the Central Bank of Nigeria. He was also the presidential candidate in the 2019 elections. He is currently engaged on a high-level special assignment for the United Nations Development Program as the UNDP Special Envoy on post-COVID development finance for Africa. Thank you very much, Prof, for your time.
Thank you. Thank you for having me.
Prof, let's start this way. Global shares have continued to rally near record levels as vaccine rollouts fuels normalization of hopes. The economy across the globe is also having a clearer picture as to the impact of COVID-19 and possible solutions to the economic crisis. But for Nigeria, the same could be said, but with the external indices of vaccine rollouts beyond our control. The budget is still largely funded by borrowing and the nation in recession. Do you share the prospects of recovery, which many investors say is a cautious optimism, particularly for the fragility of the Nigerian economy? Your forecast for quarter 1 and quarter 2, 2021.
Yes, I mean, I push rather very cautious optimism. For quarter 1 of 2021, I do not see a lot of optimism, quite frankly. But possibly from quarter 2, I think we may begin to record growth in the economy. Now, what will determine how things turn out for Nigeria is the vaccine rollout, both in developed countries and in Nigeria itself. And I think that this is a place where the Nigerian government and relevant institutions should place a lot of emphasis, because the sooner more millions of people get the vaccine, the more economic activity will return to normal.
Portfolio investments also in the first 9 months of 2020 hit $5.1 billion. We have also seen decline in capital importation and some slim margins in recovery in our external reserves, hitting about $36 billion in January due to global oil recovery demand. How do we sustain the base of foreign reserves and attract more foreign direct investment? I'm particular about that, to sustain local economy and exchange of the naira against global currencies.
Well, I mean, the whole question of the reserves, given the fact that Nigeria's reserves are supplied mainly from earnings from oil, it's still going to be volatile. Oil prices have remained at about $50-ish in recent weeks. That is a good thing. But remember that Nigeria's projections for oil production for 2021 have been severely affected by OPEC oil price cuts. Therefore, I see continued pressure on the foreign reserves for the rest of the year. I think we need to begin to look at Nigeria's economic fragility from a very fundamental perspective, and that is, for me, how we manage the naira. I believe that continuing to fund the foreign exchange market rather than adjusting the value of the naira is not going to solve the problem. It's just going to be the same pressure. You're rolling the big stone up the hill, and the stone keeps weighing you down again. So I think we need to go to real fundamentals, and that is, what do we do about the naira? Isn't it time to let the naira? First of all, let's have the same exchange rate for the naira. We should not be having multiple exchange rates. These things weaken the confidence of investors in Nigeria's economy. And they are done for political reasons, and that's wrong. So this is what is the problem. We need to have a better policy for the naira, but that means also we need to have a better trade policy, so that if you let the naira go, for example, in some sort of devaluation or exchanging for the proper value on the free market, you have to provide an incentive for that situation to also work to Nigeria's advantage. And the only way that can happen is that Nigeria becomes more and more an export economy of manufactured goods, because the incentive for importation goes down, or the incentive for exportation to earn forex goes up. I think that's the best way, a combination of forex policy and trade policy that is muscular and balanced enough to see Nigeria's economy in a better direction. Right now, we are just managing, and we've done this for several years. I don't think it helps.
Indeed, Prof. Let me follow up with that, talking about trade. Many have talked about the AFCFTA and talking about the positives therein. With our level of preparedness, do you see Nigeria getting as much as other countries would get from this large market that we keep talking about?
Eventually, we will. But right now, I'm not sure we're as prepared as we should be. In any case, it will take some time, I would say a few years, for AFCTA to really kick off and begin to work to the advantage of Africa's economies. But it's a very positive development for Africa, because all the other regions of the world, all their trade, or virtually 50 to 70% of their trade, takes place within their regions. Africa is the only continent which, where intra-African trade is so low, just about 13%. And that's just not good enough. But with AFCTA, I believe this situation will change. But now, the point I was trying to make about trade policy is that all imports from outside the AFCTA, imports of non-essential luxury items, I think we need to be able to use tariffs on them to raise revenue and to discourage importations, except for those who can afford it, and thereby create an enabling environment for local industries to be able to sell their goods at prices that are cheaper than foreign goods. That's what will encourage exports out of Nigeria.
Very well said. Another very important thing which I would like to get your comments on is about the first MPC meeting which held for this year. That was the last week in January. The NPR and other key parameters were all left unchanged, as according to the central bank, that is the best way to deal with inflationary pressure, and preferred some other solutions to the economy, insisting that liquidity injection and stabilizing the forex market as catalyst for economic growth. Now, how do you see banks faring with lending capacities and the CBN's move in the long run? Can these efforts all be sustained in pushing the economy out of recession?
Well, I think it's a sensible response that they have made, even though, a lot of people would say runs counter to economic principles, because with inflation at about 16% and the NPR at about 11%, it means that inflation is outrunning the interest rate. But there is also a trade-off, and that is that the more you hike the monetary policy rate, the more difficult it becomes for the private sector and individuals to get credit. So what the CBN is essentially doing is that they are hoping for some sort of inflationary growth, but hoping that the inflation can be manageable. It's difficult because, like I said, the fundamentals remain what they are. Nigeria's economic fundamentals have not been addressed. And many people place too much emphasis on the role of the central bank. I think the other parts of the government have not, carried the slack as much as they should. Fiscal policy is very weak. We spend so much that is borrowed. And we're just not going to get out of this if we don't begin to mobilize resources internally inside Nigeria so that we end our spate of borrowing.
Borrowing, Prof, that takes me to a budget 2021. As timely as everyone says it is, government going back to the January-December cycle. Many are worried about the deficit of that budget. And I don't know how that also comes to you. We're already talking about borrowing here. The debt is already getting much.
Yes, about 6 trillion naira deficit in the budget and to be funded by borrowing. Nigeria is in a very severe debt crisis, no question about it. And it just, it's part of what we see with many African countries. The current assignment on which I'm engaged in for UNDP, which is as the special envoy on post-COVID development finance for Africa, is basically for us to talk to governments around the continent and to do some studies and to find out how African countries can overcome the fiscal stress that they're suffering, which has, of course, on top of the pre-existing economic conditions, then you've had COVID really wipe out any hope for progress in the immediate term. So, but there are avenues through which African countries, including Nigeria, can look to for more to raise more fiscal revenues. They should look very seriously at improving the efficiency of taxation. I think that's a big issue in Nigeria. 70 million people that should be paying tax, only about 10 million people do. That gap is huge. And if it is actually closed, even if it's 50%, Nigeria will have a huge fiscal relief. Nigeria should look a lot at public-private partnerships as a way to fund projects. And Nigeria should look very seriously at land reform. So I think these are some of the ideas that could be explored, but I don't think they have in any serious depth. And so we just keep juggling, borrowing, hoping and praying about the oil price. This is no way to manage an economy or to change its fundamentals, in my view.
I've also seen countries come up with stimulus packages, just like what is even going on in the United States, where President Biden is pushing for another round of paychecks for Americans. But what we have in this part of the world, the last time the central bank governor said is about 4% to our GDP. What impact do you see this having in the long run as we move on? COVID second wave is on. We are grappling with that too. And it's if not total lockdown, go ahead, Prof.
Yes, no, what I was saying, this situation that I was just discussing,
yes,
it is the fundamental reason why we do not have state capacity to respond to the COVID crisis. Many African countries, with the exception possibly of South Africa, are in this position. But Nigeria should not be in this position. Nigeria should be in a position to be able to, inject, muscular stimulus into its economy to take care of its citizens at a time of crisis. But we have no savings, and we're over-leveraged with debt. So the central bank, I think, is about $3 billion. The fiscal injection is about $1 billion total. It's very weak compared to South Africa, which spends $26 billion in stimulus for its own economy and its citizens when coronavirus broke out. So we need to put ourselves in a far better position in terms of our fiscal ability and our capacity as a state to respond to economic crisis around the world.
Prof, you're aware that Nigerians still have a lot on the plate. When we talk of hiking the price of electricity, where the discos are saying they want cost-reflective tariff, and that's really eating deep, and also deregulation of the downstream. Some experts have come out to say, well, that's the way to go. But at this time, where we're talking about even trying to equip a living, people are trying to even get food on their tables. What effect do you also see this having on the purchasing power of Nigerians moving on?
Of course, a very negative effect. The electricity tariffs should be cost reflective, yes. But is this the right time, right now, with the COVID crisis, to be doing this? But it will happen because the government does not have the fiscal muscle. So except the government says, for example, we will subsidize those prices for this year and maybe, all up to the end of 2021 so that we can recover from COVID. That's the ideal response, I think. I think it's a terrible time to be inflicting so much pain on the average Nigerian citizen and his or her pocket. Because people, we didn't get support for COVID. Many businesses have been shut down, many people have been laid off, and then people are increasing electricity tariffs. It's a very difficult time, and I really feel bad for the situation of Nigerians.
And on the flip side, Transparency International has also come up with the Corruption Perception Index in Nigeria down 149 in 180 countries. That's also worrisome. A lot of discussions. This has generated comments from all and sundry. I'd like you to react to this, Prof.
Yeah, well, you see, the problem of corruption in Nigeria is one that is fundamental. Nigeria is experiencing state capture. The role of the state in the management of the Nigerian economy is too much, and it creates a lot of incentives for arbitrage. It creates a lot of incentives for corruption, where every infrastructure work is an award of a contract. What do you think will happen? If you had awarded those contracts through a public-private partnership arrangement, a PPP, where the private sector brings their money, do you think that you'll see a lot of corruption in it? You will not. So we need to go back to the foundations of how we manage our economy. The government is too involved. And because the government is too involved, a lot of avenues are created for corruption. So I'm not surprised at the assessment of corruption in Nigeria. And we can make any statement we like. I'm not interested in the politics of it. That's not the issue. Nigeria has had a problem of corruption for a very long time, and that problem still remains today. It's not getting better at all. But that's because we're not addressing the fundamentals of the opportunities for rent seeking, for state capture in the Nigerian economy by powerful vested interests. That's what's driving corruption in Nigeria. And we need to get the government out and play its proper role by creating an enabling environment, creating policy, but the government has no business administering the prices of a lot of things on the market. That's the problem, like the price of the dollar to the naira, for example. I mean, if you're having multiple exchange rates, what do you think is going to happen? People who are connected will game the system. That's what happens. But when you create more transparency in the market, you reduce corruption. We don't have a capable state, and we shouldn't pretend that we do. You know? So this is what's going on, and this is what is driving corruption in the country.
Prof, on a final note, the fate of the engine of growth, that's MSMEs, is swinging in the pendulum of uncertainties as they have been hits and after hits. We've identified that earlier, though incomparable to those of large corporations. But what new twists do you expect to aid current survival mode? Do you also see new investment chains in emerging sectors of the economy aside the regular base as conversations continue around economic diversification, both on the part of government and the private sector?
Yes, I mean, I do see, new investments in parts of the economy, technology services, I think will continue to boom. I think there will continue to be a lot of investment in those kinds of things. I think there will be investments in agriculture in the coming months and years, but hopefully in a way that creates value chains, that make agriculture more productive for the country. So there will be, but 2021, my prospects are not very, my hopes are not very high for 2021. But I see from 2022, likely significant economic recovery in the Nigerian economy.
That's a good way to leave it on that. Professor Kingsley Moghalu, I thank you very much for spending your time with us on the show today. Really appreciate this.
Thank you. Thank you for having me.